All right, guys. So I've had this idea, and the idea is that there's all these old school things that are working, and there's all these super brand new shiny things that are working. And I think it's kind of interesting that we have both old school things working and super new things working. And I want to kind of talk about how you don't have to have one or the other, right? You don't have to be a conservative investor. You don't have to be an aggressive investor. You just want to be finding things that are going higher. So let's start with some old businesses that probably no one is talking about anymore. We'll look at Honeywell first. So Honeywell is about a $150 billion company. I hear no one talking about Honeywell. No one's like high-fiving that they own Honeywell or anything like that. I'm pretty zoomed out on this price chart right here. This is about 4.5 years. But I want to just bring it out this far to just kind of point out some things like it could not get above that. This is pre-COVID. It was just kind of going sideways here. That's all pre-COVID crash right there. Up there, as soon as COVID hit, it hit Honeywell pretty hard. Visually, it looks horrible. I just want to see what that fall is down to the bottom there. That's a 43% fall. Now, to keep things in context, the S&P fell 34%. So Honeywell fell much harder than the S&P. And guys, the NASDAQ only fell 28% during the COVID crash. So you got Honeywell here that clearly, I mean, look at this. It clearly took out this. It clearly took out its 2018 bottom right here. It really cleaned people out. But look what happened. Once it broke above, and this is why you don't want to fall in love with symbols, right? You just want to be like, okay, look, I'm looking for some price charts. I want to buy a price chart that can help me get more secure, more stable, right? That's what we're looking for, are price charts. We're not looking for stories unless the price chart tells us a story. And so it broke above. It finally broke above in November of 2020. Honeywell finally broke. I mean, it just cranked higher. And it's probably because it was ready to go. Because look, it broke above. I'm assuming these are old, new lifetime highs right here. Let me just quickly zoom out and just see what we got here. Let me just go out just 20 years. Okay, so we're looking at a company here, breaks out to new lifetime highs in the 4 or 5 months before COVID took over. And then COVID took over, it fell 43, 44, 45%. That's a pretty huge fall. Again, I mentioned how it's even bigger relative to the S&P and the NASDAQ. Finally got back up on its feet, and it took a while. But what I want to point out now is this thing is looking beautiful. This is an old school stock. I have no idea what Honeywell does, diversified industries. But look at this. It came up here. It consolidated for a while. It broke up, came back in, and it's breaking up. This thing is moving higher. This is an old school company. No one's talking about this. That is looking beautiful. And so the idea here is that you buy price charts. Not even symbols, not even companies, but you buy price charts. You buy the price chart that can help you. So there's Honeywell. Let's stay with kind of old school companies that people have forgotten about. Here is GM. Now GM went through all this restructuring, and actually I don't know even when. I mean, I know in 08, 09, it was in a pretty bad place, but it got restructured, and it just was in just a mess right through here. Just a mess. I mean, even coming into COVID. So COVID started right here. It wasn't even near new highs. Like, it was way below its old highs. This was a very ugly looking chart going into 2020. But look what's happened now. Look at that resistance right there, that support resistance. It broke above finally at the end of 2020. Okay, and again, look at all this weakness here. All of this happened below all of this right here. So my attention's over here right now, but I'm going to do it horizontally and just show you there. Like, the price could not get above that zone. It could not get above it. All these sellers were kind of hiding at the $38 range. And sellers were hiding at the $41 range. But after COVID, came down, fell pretty hard. I just want to see what that fall is there. It wasn't even near 52%. That's 52% right there. But if you take this high over here and go to the bottom of there, let's just see, it just gets worse. 59, let's call it 60%. But that was the past. And now at the end of 2020, GM, that GM that makes those cars, broke above to new lifetime highs. This is a beautiful breakout right here because it broke above it and then it sat back down on that $41 and more buyers came in. And now it's just been moving higher. And again, I don't hear a lot of people talking about Honeywell or GM. So here's truly a kind of an old Rust Belt, kind of that Detroit Midwest name. It's looking great. And if we go to 21 here, let's see what it's up for the year. It's up about 45% for the year. Now, in reference, the Nasdaq's up a couple percent, and the S&P's maybe up about 7 or 8%. And this thing's up 45%. I would not be surprised if this ends the year up 100%. Couple more old school companies. Here's Dow Holdings. Again, another old school. Look at that. Could not get above $53. It just couldn't break above $53. This looks very similar to GM, right? It broke above, sat back down, and then is moving higher. So now you have another old school. Now this is smaller. GM's about 90 billion market cap. This is 50. I'm rounding here, 50 billion. But again, super old school, forgotten about company that is just looking beautiful. Yet another one. Let's go even more. I don't want to keep saying old school. I mean, these companies are crushing it, but they are like Caterpillar. I mean, look at Caterpillar here. This right here was its trade war high. This is when Trump came out and said we're going to do a trade war with China, and that it just could not get back above the trade war high until mid 2020. If you look at that, because finally it broke the trade war high. Same thing here. You're seeing a lot of support and resistance being broken at the end of 2020 from really companies that no one was paying attention to. I know everyone was talking about GameStop. And you had the same thing here with Caterpillar where it broke above, it came back down in there, found buyers again, and it is breaking higher. Right now, let's just kind of see what this thing's up for the year. Yeah, it's up 23%. Not bad. Deere, which is in a very similar category as Caterpillar, looks even stronger. I mean, that thing just absolutely took off. It was above its COVID high. Sorry, it was above its trade war high here. Here was the trade war high. So Deere was acting much stronger than Caterpillar way before Caterpillar was. And it could be maybe because Deere has more of a U.S. domestic exposure than Caterpillar, and so orders may have been coming in. I'm just making that story up, guys, but Deere was definitely acting better because it had broken out right there to new lifetime highs. It got taken out like almost everything else did in COVID, but you can see here in its sidewaysness. So look at that sidewaysness, about 2 years. The price tried to break above, got pulled back in. The price tried to break below, got pulled back in. And finally, again, mid-2020, it broke out. And it has just been moving higher ever since. Let's see what that correction was going into COVID. Visually, it doesn't look that bad. It was 37%, so it was worse than the S&P, and it was also worse than the Qs. But just beautiful looking. Okay, a couple old school ones that no one's really talking about. I'll jump over to financials and just talk about JP Morgan. And the reason why I wanted to bring up JP Morgan is it's a really big company. It's almost $500 billion, $500 billion. And look, it's an ugly looking chart, but it finally did break out, sat back down into that support resistance, found buyers again, and is moving up yet again. So we just went through 6 stocks, in size between maybe 50 billion to 470 billion. They're all looking good. Let's just see, Yeah, JP Morgan's up 20% this year. Again, the S&P's up about 8. This is all dividends reinvested too, guys. And the S&P's up really big today as I record this. So let's just see December 31st. Let's just see 372. Yeah, so what's the S&P? S&P's up about 9% for the year. So all those old school ones I just talked to you about, they're up multiples of the S&P. And by the way, not many things are actually beating the S&P right now. Emerging markets underperforming. The Qs are taking a break. They're not down and out, but you can see the Qs sat back down on that September high in 2020 and has been digesting that. But the Qs are still below their high from February, where the S&P is just making new highs. But the Qs are getting back up and they're moving higher pretty quickly. So that was all old school. Those are all companies. I know GM was restructured and Dow was restructured or spun off, but these are all really old kind of Rust Belt-y like companies. Now flip this to crypto. Okay, so now we have like the hottest, newest, shiniest thing happening. But the similar thing is going on with crypto. So here's Ethereum right here. Here's Ethereum at new lifetime highs. It finally broke above its January 2018. So Ethereum peaked about a month after Bitcoin did. And you can see that right here, that Ethereum, which is the second largest market cap crypto, second to Bitcoin. So the market cap of Ethereum is probably, guessing, 275 billion, somewhere between 250 billion to $300 billion market cap. So it's big. And it just went out to new lifetime highs on Friday. Actually, Good Friday here in the US, or any parts of the world that recognize Good Friday, went out to new lifetime highs on Good Friday. It's looking very similar to GM in the sense that it's broken out to new lifetime highs. It's looking very similar to Honeywell breaking out to new lifetime highs. But that's Ethereum right there. That's not a tracking symbol. And of course, Bitcoin, we can just look at that quickly too. That had broken out way, way, way before. I like Ethereum over Bitcoin because it's just now breaking out. Ethereum is right here. All right, so to me, Ethereum is right here. Now, this is the Bitcoin chart, but I'm showing you where I think Ethereum is right now. It's just breaking out to new lifetime highs. And Bitcoin had a pretty good run after it consolidated for 3 weeks, and then it went up about 200%. It would not surprise me if Ethereum had just a ginormous 200% run also, which if it did, that would put that market cap at $750 billion. If Ethereum went up that fast, I doubt Bitcoin would. I don't think Bitcoin would go up that 200% during the same time period, but I have Ethereum over Bitcoin right now. And it's easy enough to sell. We can just take Ethereum and we can divide it by Bitcoin. So let's just see. So the price chart you're looking at right now it's Ethereum, but it's not priced in US dollars. It's actually priced in Bitcoin. And so this is called a relative price chart. And you can see of the two, which one is stronger. And you can see right from here, let's see what that date is. September of 2019. So since September of 2019, Ethereum has been the stronger coin to be in. Clearly, there's a lot of volatility. It goes down, it goes up, kind of sideways, up, down, goes up, goes down. So it definitely has its move, but since September of 2019, that's pretty good. We're about 18 months into this being stronger. So that's a legitimate move of Ethereum being stronger than Bitcoin. But you have this new thing that hasn't been out that long. And though these moves are way bigger than what I'm showing you in Dow and GM, but I'm talking about price formation here. And price formation is very similar to these old school ones compared to these brand new shiny ones. And then I'll show one more. I just want to zoom. I want to get back to 3.5 years. I'll show one more price chart. Okay, so I want to show one more price chart because a lot of people, they don't want to go open up a separate account at a new exchange Here's a company, Marathon Digital Holdings. It's small. It's about $5.5 billion. And it just broke to new lifetime highs right there. It was in a consolidation. That's a very, very volatile consolidation. That from that top right there to that bottom's 40%. So that was pretty volatile. But still, it's just now broken out to new lifetime highs. So that's clearly noticing what's going on with Ethereum. Bitcoin by no means looks weak. Here was Marathon's old lifetime high right there that it hit at the beginning of 21 and had a correction. If you can see this right here, that's beginning of 21 right here, came up. But look at this correction. It's just right where it exactly, same price it corrected at the end of 2017. Did this correction here. That certainly scared people. That was 34%. So look, if you're going to own a Marathon, you have to understand that this can move 40% against you, maybe 50% against you. I mean, here's that move there. What was that move? That was a 67% move. But this thing is out in clear air now. It is at new lifetime highs. It is on fire. The price tells you people are loving this and buying it. This is incredibly liquid. So to me, the big takeaway from just what I'm kind of talking about right now is, on one hand, we have old school companies, JP Morgan, GM, Dow, Caterpillar, Deere, Honeywell, that are doing great this year. They're up 2, 3, 4x what the S&P is up. And then on the other hand, we have these brand new shiny objects, things to do with cryptocurrency, blockchain, right? And the formations of them, they look very similar. Now, the crypto, the blockchain, those digital, those ones, they're up, 10x what the S&P is up, right? So the multiples are different, but the formations are exactly the same. And you can literally, and this is one of the things I train both my trading course students to do and my investors, is you're buying a price chart. Like, know what you own via the price chart, right? Because the price chart's what's going to make you more stable, more certain, more comfortable, more confident. It's going to give you more things to be able to do. So thanks guys for being here. I appreciate that. If you like this video, you will love the other videos we have. Please also hit the like button. Also too, I have an amazing, absolutely free training. A lot of people ask where I can start. I have this training course called Clarity and Control. Two of the things I've heard over the last 2+ decades that people want, they're asking about having a level of clarity that they don't have. They want to be clear about what is working, and they want to have control back over their money. And so I put a 4-video series training together, absolutely free, that you can figure out. You can figure out what's not working in these videos, just literally by watching me, like, oh, that's why it's not working in my own portfolio. So it gets right to the heart of the matter. Go ahead, they're in the description, and you can get a link to them, and you can start that right away. Thanks, guys, for being in my world. I appreciate you, and I will see you.